Hi everyone, my name is Martin Asgard and I'll be holding a talk about money Legos, the building blocks of DeFi. First, let me present myself so you know who I am. I run the company Galliot, where I am the CEO and the founder. We make decentralized IT solutions, and they are built on a system of Helium, and Helium is a company in America. And they made an IoT service and they combined it with a cryptocurrency and a blockchain. So that's a very elegant solutions that we're working with. Before this, I've been in the cryptocurrency and blockchain space since 2016. First as an enthusiast, and then more and more involved with different projects and meetups. Since I moved to Stockholm, I have held talks with the Decentralized Camp, which is a very friendly meetup group here in Stockholm, where you can, if you want to learn more about cryptocurrency and blockchains, that's a great way to turn to. I also been a guest at Consensus-podden, a Swedish podcast about cryptocurrencies and blockchains recently. And lastly, in this last spring, I was a guest speaker at a webinar with Predly, which is a consultancy firm for emerging tech here in Stockholm. So let's dig into the world of DeFi. So first, I would like to start with explaining and defining what DeFi actually is. So DeFi stands for decentralized finance. And that's usually, when you talk about DeFi, it's activity and projects that are based on the Ethereum blockchain. And the Ethereum blockchain is an open, permissionless, and accessible blockchain for everyone. DeFi so far has mainly been about taking traditional financial services and onboarding them to blockchain-based services. And that could be lending, exchanges, and derivatives, to name a few. But then there are also key differences between decentralized finance and traditional finance, and I will get into them shortly. So let's take a look at and compare the two. I just selected a few metrics that I think is extra interesting to highlight here. But if you look at decentralized finance versus traditional finance and take a look at the transparency aspect of the two, I would say that the transparency of decentralized finance is much higher. As you can see, many of the projects that we will be looking at they can cooperate, and you can also use other services of other projects. And in traditional finance, I would say this is less likely that you can do. When it comes to composability, and this is a term used for how easy it is to take parts of a service and use it for something else, to use different components and combine it in different ways, I think this is very high in decentralized finance, whereas in traditional finance, it's much more closed. So if you look at the traditional bank, it's not like they can plug into each other easy and access interest rates from another bank. But that's done on the daily in decentralized finance. And lastly, I would like to point out that the risk reward in this DeFi, decentralized finance, is usually very high. You can earn a lot, but it's also very high risk. In traditional finance, you can, of course, take higher risk, but I would say it's even higher risk in DeFi. So it's a bit like the Wild West. You have much to gain, but also much to lose. But let's get on the journey and see where it takes us. To set the stage for what we're actually talking about here, I would like to present this chart. This is CoinGecko, a site where you can see and compare different cryptocurrencies and blockchains. So everyone knows about Bitcoin. It's by far the biggest cryptocurrency today by market cap. Like the total value in this cryptocurrency is the biggest. But then at the second place, we have Ethereum. And Ethereum is where most of the DeFi activity is happening today. And for some, this is the definition of DeFi, what's going on Ethereum. Some would argue but most activity is actually on Ethereum. And lastly, I would like to bring out and show you Tether, which is a stable coin. A stable coin, as you can see here, has a value very close to $1. And Tether, in this case, is a token which lives upon Ethereum. So it's a part of the Ethereum network, but it has the characteristic that the value would always be $1, which is very useful if you want to make some financial services. It's very useful to have a currency which does not fluctuate in value. It's also worth mentioning that right now we are in a bull trend for cryptocurrencies. So both Bitcoin and Ethereum reached all-time high at the price very recently. So there's a lot of activities and a lot of cash flowing into DeFi and the cryptocurrency space right now. This graph, I would like to highlight that DeFi has been growing a lot lately. In the last year, the total value locked in DeFi, and that's defined on how much value are locked inside smart contracts and services that are defined as DeFi. And at this graph, we look at the value in dollars. So since the Ethereum price is going up, also the total value goes up. But it has been a remarkable last year for DeFi, and a lot of services has been built, and more development has been done in this space. So now that we have some background and some references what we're looking at in DeFi, let's take a bit deeper dive into Ethereum and how it all works, how to build these DeFi services. So at the Ethereum blockchain, for example, you can make smart contracts. And basically, smart contracts are code that someone made and uploaded, in a sense, to the blockchain. And then this piece of code will always live on the blockchain. Then you and me, or the author of this code, could interact with this piece of code to make financial services, for example. You can more or less program anything with a smart contract, as long as it abides with as long as they can abide by the rules of the blockchain. I would also like to point out that there are many smart contract platforms out there. Ethereum is the biggest one, but there are many more that have other features compared to Ethereum. But we're going to stay on the Ethereum for this talk to keep it simple. Smart contracts are usually open source, so everyone can read what's been written in the code. So if somebody makes a financial service, another person could get in and see about what do you actually make to make this work. And that's a big difference to traditional banking, whereas I cannot go in and see how the bank deals with my money and how the interest rates are set and so on. Smart contracts are often done in using different standards. That makes it easier for different individuals, organizations, or developers to reuse other people's code because they use different standards. And we're going to get into this very shortly. One of those standards is the ERC20 standard, and the Tether, the stablecoin, which I mentioned in one of the first slides, is one of those tokens, which follows a specific standard, so it's easy to use and plug into different DeFi services. So now that we have some understanding of what a smart contract is that lives on the Ethereum blockchain, let's look at what a dApp is. A dApp plays with the name of an app, but it's a decentralized app. dApps are usually made of one or several smart contracts who lives on the Ethereum blockchain in this case, and the user interface. The user interface could be a web-based one, so you can access it through your browser, or it can be on your mobile phone. If you make some kind of service, like this, the one we see here, which is called Aave, that is a DeFi service. And they have a user interface, the one we see, and they can interact with smart contracts. And this is one of the beauties in DeFi. They have made some of their contracts themselves. They have developers writing new code and uploading it to Ethereum, but they also reuse smart contracts which other people have developed. So they don't have to do all the groundwork themselves. And this is what is one of the real beauties in the space of DeFi. Let's take a look at a bit more on how you interact with these dApps. So for example, let's continue with this Aave. And Aave is a lending platform. You can borrow and lend using this platform. You can get interest on your assets. So if I would like to go, as I have, to go to Aave and interact, to maybe deposit some of my funds because I want to gain some interest on my funds, I can do this while using a web plugin, a wallet in my browser. And in this case, it's called MetaMask. And that's one of the most commonly used plugins for web wallets. Using MetaMask, you have custody of your own funds. Unlike if you go to a bank, you give up custody, you send your money to a bank and you trust them to keep your money. If you have MetaMask, you hold your own funds. You have a wallet and it's your money, it's your assets you have on this. And if you want to make a transaction, if you want to hand over your money to Aave, you sign a transaction, hand it over to them, and at every given point, you can take it back from them as long as you repay or get paid what they owe you or you're due. And inside a wallet like this, you can have both Ether, which is the native cryptocurrency of Ethereum. You can have a stable coin like Tether, or you can have any other token which lives on the Ethereum blockchain. So let's dig into why I chose this name of the talk today. Money Legos is a commonly used term in the DeFi space because it refers to services in the space which different individuals, companies, and developers do, which can be reused and organized in new ways. And just as pieces of Lego, they can be combined in very many ways, but they are done so it's easy to combine them, right? They have used certain standards and they have thought about how other people are going to reuse what you make when you make these pieces. And this is very different from a lot of traditional financial services that we have today, where it's more closed. You need to develop your whole IT infrastructure by yourself and the front end of your services and so on. In the DeFi space, you can reuse much more. So you need to do maybe less work, or you can specialize on some pieces that you want to do in your project. And Money Legos being combined, I would call this, or it's usually called composability, when you can take different pieces from here and there and combine them to something new. That's composability, and that is one of the key breakthroughs of using DeFi. So let's go into an example on how to use these Money Legos in DeFi using some kind of transaction. This is just a schematic overview, but I think you will get the picture on what I mean. So let's base on, firstly, we have MetaMask. We have a wallet inside our browser. In the browser, we can connect to the Ethereum blockchain and access some Tether, which is this stable coin, which is worth $1. I can deposit these Tether into a lending platform such as Aave. Aave has a user interface which I can read and understand what I'm doing, but in the backend they have smart contracts to live on the Ethereum blockchain where the actual financial services happen. So they have a front end that I can see, and in the back end they have the Ethereum blockchain where the transaction is happening. And in this case, MetaMask is acting both as your account, but also kind of like an ID for you. So if you would compare Aave to some kind of banking service, say Avanza in Sweden, then MetaMask would be both some kind of account that you hold, but also probably bank ID that you use to sign your transaction and log in to Aave. Another option for you, if you have this, if you have your assets here, would be to send them to Yearn Finance, which is a automated investment service, and they in turn can, if you deposit your funds to Yearn, they will select where you can find the best interest for your money and move them around these services. So Compound here is also a lending platform where you can lend and borrow assets and get an interest or pay. And Yearn will take care of this for you. So if you deposit it into Yearn, they will select the move around. And this can be done many times during a day. As long as there's a higher interest on another service, they will move the money together with other people's money. And then in the end of the day, when you want to retrieve your funds, you return to Yearn and you withdraw the money using MetaMask again. And another cornerstone of the DeFi landscape, the ecosystem that we're talking about here, is Uniswap. And Uniswap is a decentralized exchange. An exchange is similar to a stock exchange, but for cryptocurrencies and tokens that live on different blockchains. Uniswap is only for Ethereum though, but the concept is the same for other blockchains. And this is also interesting to see, because if you would deposit money into Aave, you could also, through Aave's web interface, trade against Uniswap using their interface. So this is what I mean with you can use one interface, and the interfaces itself, they can reuse all these smart contracts that live on different places, even though they didn't develop it themselves. And that's a very elegant characteristic of the DeFi space. There are even more advanced setups that you can do in DeFi, and it's a common term that was minted mainly last year is yield farming. And yield farming refers to earning yield, which is earning interest. So it became almost like a sport for people to find the best interest, finding the best yield, and moving their assets around. So now I took a fairly simple example, but you can, if you want to dig into this rabbit hole, you can go really far and find all sorts of interesting setups. This is to show you the whole, or part of the whole ecosystem that is living with, or what we call DeFi today. We can see on the left here asset management tools such as MetaMask, and there are also several other wallets. You can find Uniswap, Parrot exchanges, together with many more. There are also stable coins as Tether. There's other stable coins which have other characteristics. But this is just to show that the DeFi landscape is huge and it's very hard to keep up. I have used maybe a handful of these, and I would say I've heard of half of them, because it's popping up more and more. There's so much development going on in this space. So I think very few people in the world knows about all these services on the screen here. And also, since a lot of activities is happening very recently, like even the last year and 6 months, many new projects are born all the time. So some of the biggest projects right now, they might not even have been around for 6 months ago. So there's a very, very rapid involvement in this space. So if you would like to get started, if you would like to dip your toes into DeFi, this is one way of doing it. Using a mobile app like Argent, you can have a wallet that lives on your iPhone or your Android phone. In this case that I show you here is you can even use credit cards in the app to buy Ethereum or Tether, and then you can interact with these DeFi platforms that I brought up today, such as Aave, Compound, and Yearn, directly from the app. So this is another example where money Legos are combined, and the app itself is the interface, but they can access all of these services that other people done on the blockchain. And this one in particular is only for meant for Ethereum and tokens and cryptocurrencies which are based on Ethereum. But there are also, of course, other mobile wallets which you can combine, for example, Bitcoin and so on. And this is another way, if you want to have a bit more advanced features, I would recommend to use something like MetaMask. A MetaMask is the web plugin that you can have in your browser, and this is a different way of getting from your fiat money from your bank into a centralized exchange, such as Kraken here. But this has to be done with an international bank transfer. So for some people, this could be preferred, and for others, it could be easier to do it with a credit card. The benefit of using this solution is that you get more features if you use a centralized exchange, such as Kraken, and you pay less fees. And that's at least something that I prefer to do. Now we're getting into another example of a DeFi service. And here I really want to highlight that if you go to Yearn.finance, if you have MetaMask, if you have USDT, which is Tether, this stable coin that we mentioned several times, you can get up to 13.5% interest per year using this. However, it must be noted that, of course, downsides and risks here. I would say one risk of doing like this is that you have the whole Ethereum. It's a risk doing financial services on Ethereum. So that's one risk. If there's a security flaw in the protocol itself. Another risk would be the smart contract, which would handle your money to get this interest. That's also coded by a human being just like you and me. And if they made a mistake, this could be exploited, or if there was a bug, money can be lost. And it has happened before. So this is really to point out the rewards are high. I mean, there's no normal bank account in a traditional banking service today that you can get this high interest. But in the DeFi world, this is normal. And a final note on the interest rate, that is not consistent. So if you would lock in your money, this could go up or down on the daily. So it could be 7% in 2 weeks, and it can be 50% in 4 weeks. So that's really something you should bear in mind if you try this. So don't go in with more money than you're willing to lose. That's a normal saying. And now I come to the final slide of the presentation, where I just to wrap up and give some thoughts about the DeFi space. I think the DeFi space will continue to grow and improve. We have already seen a lot of improvements in things like user interface, so it gets more easy for people to use these services. That has improved greatly the last couple of years, and I think will improve even more from now on. I think it would start to challenge traditional finance even more than it has today. I think big banks will start to realize that DeFi services will really challenge what they do in their business, and they either have to adapt or some of them will probably fail. But I see a lot of hope with this, because DeFi also enables anyone in the globe, as long as you can access an internet connection and a computer, you could potentially start with DeFi and the banking services that they offer. It's not everyone in the world which can access a banking service, but DeFi doesn't hinder anyone from participating. And that's also a great feature that they have. What I hope to see in DeFi, a very special case would be to see if you can ever see a house loan, a mortgage being done with crypto. So your house or apartment has a security on it, just like mortgages are done today, but it's done on the blockchain. So I hope you learned something today about DeFi, and that you maybe get even more interested, maybe dare to dip your toes. And I would just like to say thank you for listening, and bye.